This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Domestic sales of gasoline and diesel by Indian state refiners plunged by a fifth in the first half of May from a month earlier as lockdowns to curb coronavirus infections hit industrial activities and consumption, preliminary data showed on Monday. Gasoline and diesel sales over May 1 to 15 fell by about 20%, while jet fuel consumption slumped by nearly 38%, versus April 1 to 15 levels, the data compiled by the state refiners showed. Trucking activity is almost half of what it used to be in normal times, S.P. Singh, senior fellow at Indian Foundation of Transport Research and Training, said.
China's crude oil throughput rose 7.5% in April from the same month a year ago, but remained off the peak seen in the last quarter of 2020 as several state-run oil refineries carried out maintenance amid thin margins and high fuel product stocks. The country processed 57.9 million tons of crude oil in April. Data from the National Bureau of Statistics, NBS, showed on Monday, equivalent to 14.09 million barrels per day, BPD. That compares with 13.1 million barrels of oil per day in April 2020, but was well below the record level of 14.2 million barrels of oil per day registered last November.
Moving on to the top news in the energy sector.
Finland, one of the major buyers of Russian oil, has been gradually decreasing its purchases of Urals crude as the nation turns from fossil fuels to green energy, traders said and Refinitiv Econ data showed. The country's main refiner Nest Oil runs mostly Urals crude oil as the short distance from Russian Baltic ports to Finnish sea outlets makes for low transport costs. Finland's imports of Urals oil grade fell by a quarter in January to March of 2021 year-on-year to 2.1 million tons, according to Refinitiv Econ data. In April purchases fell to just 0.4 million tons compared to 1.1 million tons imported in April 2020.
Oil prices edged higher on Monday as European economic reopenings and rising U.S. demand helped offset weakness earlier in the session due to surging coronavirus cases in Asia and underwhelming Chinese manufacturing data. Brent crude rose 56 cents, or 0.8%, to $69.27 a barrel by 11:22 a.m. Eastern Time, 15:22 GMT, and West Texas Intermediate, WTI, crude was up 63 cents, or 1%, at $66. The British economy reopened on Monday, giving 65 million people a measure of freedom after a 4-month COVID-19 lockdown. Next, we have the top news in metal market. Chinese builders have slowed purchases of steel-based materials after prices soared to record highs, but the top steel-consuming construction sector is expected to remain well supported until the rainy season slows activity from June, trade sources said. The most traded contracts for construction-grade steel rebar and wire rod on the Shanghai Futures Exchange have surged close to 40% this year, and over 20% since April 1. Amid a stimulus-driven building boom that has helped lift the Chinese economy since late 2020. But some construction companies are now restraining metal purchases over concerns that prices may be overstretched.
China's coal production slowed in April to the lowest level since July 2020, curbed by ongoing safety inspections at major coal mines following several accidents across the country. China churned out 322.22 million tons of coal last month, down 1.8% from the same period a year ago, data from the National Bureau of Statistics showed on Monday. Output over the first 4 months of the year reached 1.29 billion tons, up 11.1% on year. Physical thermal coal prices had soared by 20% over the month to May 10, prompting at least 3 leading Chinese coal pricing indexes to suspend daily price assessments to try to stabilize the market.
We will now look at the top news in the agricultural sector.
Russian wheat export prices for the old crop were mostly stable last week, supported by a stronger ruble and lower wheat prices in Chicago and Paris, analysts said on Monday. Russian wheat with 12.5% protein loading from Black Sea ports for supply in June was at $278 a ton free on board, FOB, at the end of last week, unchanged from the previous week, the IKAR agriculture consultancy said. Prices for the new crop, which will arrive this summer, were at $272 per ton as of the end of last week, but IKAR expects them to decline soon.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.